This is daily market analysis for tomorrow, October 15th, Tuesday. Another new day. Let's plan for that. So we'll go through all of these parameters. Let's begin with the charts first. Here we see the Nifty 50 charts is what you see here, and there was a 6% correction that happened, and then this is an first attempt to recover from that, and today we have a green day on the Nifty with the nearly 0.66% of up movements. That's a gain of 164 points nearly. And Bank Nifty did remarkably well, trying to do the same thing, recovery from a 8% correction, and it did almost 3% of correction. And today was a solid green candle, bullish candle, with the 645 points, so 1.26% of the gain. So recovery was even more better than the Nifty for that matter. But remember that there is every possibility that this correction, this price action could end up as a lower low, lower high. After making the next lower high, we don't know where it makes. It could go as high as moving average and then can fall back to make a lower low. There is a possibility. You cannot rule out that because there is no confirmation of the trend and momentum or anything else as of now, which confirms that, which states that it has already moved the bulls. So it has not happened yet. So unless the price had a green candle above the 20 exponential moving average, we cannot be sure on that. A lot of hurdles, a lot of resistance also, but there's a first step. A major resistance zone is what Nifty was fighting with today, and Nifty also, you can see that it has hit the next major resistance zone. So the good thing is that it has cleared the 50 exponential moving average on both the indices. Right, so that's the price action. A strong Bank Nifty momentum picked up. Momentum has climbed in the sideways and just staying there in the Nifty. Now it is seeing a rise up. Trend has not crossed over to the bull zones yet, but the bearishness of the trend has reduced. So there is improvement in momentum in the trend, and it has hit a point where anything could happen. You could see a move here and then a move down, and then next up lower height. So that is very much possible. So be very cautious at this point. But as of now, the recovery seems to be going smooth with 1.6% recovery in the Nifty and 3% nearly recovery on the Bank Nifty. The Bollinger Bands that you see here clearly says it's sideways consolidation that's happening in the short term with the Nifty and the Bank Nifty both. Because if there is a move, then the Bollinger Bands start expanding on the upside. So that has not happened. So it's pure consolidation sideways move. So this is a small expansion that you're seeing on the Bank Nifty. If that further moves down, then we could anticipate a reversal. It just begun but not confirmed as of now. It's pure sideways. Right, so the price has to go above 20 moving averages. Then you can see it has got bullish bias. So as of now, it has got bearish bias consolidation on a short term market or both indices. That's what it says. But today's price action specific was very good. But the point is, it has reached a point where change in polarity bounce down could happen. And the price action wise, if you don't lower high, lower low pattern could emerge out of this. So be cautious on that. Also, you can see possibility of a head and shoulder pattern. Right. This is the head part. These are shoulders. So the second right hand side shoulder could mean that it has to move down to the previous swing low. Then it becomes a head and shoulder pattern, which can move right. So this is 50,250. So it can be a big move. Head and shoulders height is around 4,000 points. So that kind of move can happen downside if it is confirmed. But head and shoulder works better on weeklies. So weekly you don't see that much evidence, but daily there is a possibility of a head and shoulder close. Right, so this swing lows at 24,700 is very very crucial because it confirms the head and shoulder pattern also on the short term. So if you look at the levels, the first resistance, the resistance remain more or less the same. The first hurdle would take out the 25,273. That's where the 20 exponential moving average is there. Right. After that, you have the gap resistance at the 25,850. Before that, the previous resistance zone is there near the 25,500, 25,470 nearby zones. That previous resistance zone is crucial. That's where the 20 moving average, not exponential, but the moving average or the median of the Bollinger Band also comes in there. So that's the resistance. That's on the upside. Downside, it could retest the previous swing lows at 24,700. That's very crucial. And if that breaches that 24 or 432 is 433 is where the previous next previous resistance zone, as well as a 38 Fibonacci retracement in confluence with 100 exponential moving averages. At 24,500 is also 24,432 is very crucial support after the 25,700 risk bridge. After that, the previous swing lows comes in at 23,894. So 24,000 also is there. It's also crucial. Bank Nifty, if you look at the resistances, on the upside is the 20 exponential moving average, which is at 52,000 nearby zones. So clearing 52 with a green solid candle there is very crucial. If that is done, then 52,817 is the next stop. Right? That is a major resistance zone because it's a neckline. So 358, if that is cleared, so that will be the zone of contention. So anything could happen between this 52,000 and the 53,000 nearby. 5350 and 52,000. That 1,300 points is going to be very crucial. That will determine whether the recovery is for real or is that heading for more corrections or not. Right. And downside, the first previous swing lows will be the 50,200 nearby zones where that could be retested, and that's in confluence with the 50 Fibonacci retracement levels. Previous swing lows or that confluencing at that point. So 50,000 is a rounding number just below that, so that's going to be very crucial. 50,000 to 50,200, that is going to be very good support if it all drops. So, and after that, then 49,650 the next stop. 49,650 is next stop because it's a previous swing low, and after that 49,186 is where the 200 exponential moving average is there. That's the next support. After that, that's about resistance supports. Momentum, we already seen that it is sideways and rising up. Trend areas, you can see that it is still bearish, but it is improved by reducing the bearishness. The DMI strength of the DMI has reduced in both indices. So when the trend has improved, volatility has actually today it is flattish, just 2% down. So volatility is not spiking up, itself says that probably the recovery may be for real. So volatility is lower, volatility just making things easier. A few more days for the expiry. So for Nifty, we have the levels showing 25,000 and 26,000. Right? So 1,000 points is where everything seems to be same, where the highest protocol writing is seen. For Nifty, it is 51,000 and 54,000. So a more wider range is where the bet is made for the weekly expiry that's coming day after tomorrow, and Nifty's expiry that's coming on Thursday. Right. So for open interest, we see that it was a short covering day. Nifty in the Bank Nifty, you can see it was a short covering day. PCRs are still not good enough. It's still in the BR 0.7. It's still, it has improved on the Bank Nifty actually. It has climbed above one, so that is a good thing. PCR in the Bank Nifty has improved, so things are getting improved on the OI side as well. For institutions for selling big time, right? It is 60,000 plus crores of selling that has happened in just last couple of weeks alone. They have never ever bought a single day, right? So that is a saddest thing, and it is only because of the mutual fund money that has been consistently buying, right? Because that market is not crashing down. Keep that in mind. So for institutions are selling consistently. And US markets are green at all-time highs, and gold is also at the peak, which is a worry. Gold is as a hedging instrument is good, but gold spike of normally market does not sustain at the top. Oil is also cooling down after some ease in the tension in the Middle East, but that retaliation by the Israel news is still like a Damocles sword is there in the market. So things could go wrong anytime, and if the news turns out. So anyways, very cautious about that. Black signs could come in anytime. Be very careful. And to sum it up, market is consolidating sideways for sure. Fundamental trend has improved. It has attempted a recovery good percentage of recovery. Banks are showing strength, but cautious because it's heading into a big resistance zone on both indices. So that's all I have. Thanks for watching. Happy trading. Happy learning. Bye.